welcome to another Monday Morning Roundtable, and I'm joined today by Jeff Yasteen, Adam Sarhan, Roger Scott, and Jeff Zananiri. Gentlemen, welcome.
Hello.
Hey.
Thank you for having us, James.
What's the sentiment in the market today, and where are we in terms of strategy?
Well, I think the market's obviously moving higher off of the news from Moderna about their vaccine, 94.5% effective, something along those lines. And to me, it just points out, the thing that I think we've all sort of been talking about in bits and pieces here, which is that this sort of vaccine trade, not buying the vaccine makers, although some of them make for pretty good trades here, but just the idea of the reopening or back to normal, if you will, aspect or theme of the market, I think is the place to be. And I think that the jumps we're seeing in energy stocks, travel, leisure stocks, banks, those sorts of things, that's the place to be versus sort of the stay-at-home trades, which don't seem to be doing that well today.
Sure. Well, that makes sense. Did the CEO of Moderna sell any stock today?
I know they have been sellers in the past, and I think that held the stock back a few months ago when it last peaked. I haven't looked at the open insiders trading tables yet, but either way, would you buy it here, Moderna? I'm not so sure, but I think there's actually an emerging opening now with a lot of the sort of secondary ones that were big, say like 6 months ago. Inovio, Dynavax, some of those are probably the place to rotate into if you're trying to buy stocks that have not, that look like they're starting to trend higher, but have not started to accelerate and gone parabolic the way Moderna arguably is going.
Sure. And Jeff Z, have you got exposure to the vaccine stocks?
I don't trade pharma or biotech per se, James. I learned a long time ago that they're a difficult sector to be a tourist in, and I'm not. I like to trade in things I'm an expert at. So, not exactly my bag, but
So
I'm
where are
watching
you
them
today?
closely. Sorry.
So where are you today?
Well, I like the financials. I've been talking about them for a while. That's a good value play. I don't think that. I think it's very popular for people on a day like this to be like, I've been in Carnival Cruise and I'm pounding the table. It's like, yeah, well, you've been getting your butt handed to you probably for 6 months. And then you have this up day, which is great. And those stocks could continue to run. So I'm not discounting it. But I think in broad generalizations that this is really good news. All of this is really good news. But Roger and I have been discussing this like on a show we do separately, that there's not going to be a light switch moment. Companies that have been doing well, a lot of them will continue to do well. Some of the companies that are quote unquote the stay-at-home stocks are a little bit frothy and they feel the pain. But some of the semiconductor companies that have been, killing it on this increased demand for electronic equipment are going to continue to kill it. So I think that to just broadly, brush the market as stay-at-home or economy open is probably a mistake at this point. And you can get caught in these day like surges that kind of fade afterwards. So,
Right.
To put that money to work today in search of that, or to short something like that's not a reopening stock today would probably be a mistake in my estimation.
Sure. Okay. And Adam, do you have exposure to any of the vaccine stocks?
I am, for full disclosure, I'm long a lot of biotechs, and I've done very well this year being long those biotechs. In the short run, I do want to say, James, that there's two things I'm focusing on right now. Number one, to see if this rally has legs and it'll continue. And the other is retail stocks. A slew of retail stocks are reporting earnings this week. And I want to see how, number one, how did they report? Like, what are the numbers? Because we know last quarter was a strong quarter based on the rebound factor. And then two, more importantly, I want to see how these stocks react to the news. So if by Friday's close this week, the market had a nice big gap up, which it's doing now, and then it sells off hard, that's not going to be a good sign for me. But if it gaps up like what just happened and it continues to rally or it moves sideways, that's a very good sign. And then furthermore, other countries or other stock markets are doing very, very well. The emerging markets ETF, EEM, is trading extremely well. A lot of the markets now are extended, overbought. They're due to pull back. We've had a big move over the last several weeks in the back to normal world, the stocks like Jeff Yasin just mentioned. And meanwhile, the stay-at-home stocks that have pulled back. I call that the great mini rotation. Back in the day, they used to have a great rotation from stocks to bonds and vice versa. So whenever I see this, mini rotation happening beneath the surface, where you move out of leaders into laggards and so on and so forth, and back and forth again, I just call that the great mini rotation, which just tends to be healthy in the long term.
Mm-hmm. Okay, and Roger, what have you got in the way of vaccine wisdom for us?
Well, I don't have much in the way of stocks, vaccine stocks. I think the majority of that is priced in, and I actually think that is the sector that the stock market is very becoming kind of turned off on. On my sector watch, the healthcare sector is now number 8 out of 10. What I am seeing is I'm still seeing this morning at the open. I don't know right now, but at the open, the Russell 2000, the small caps were up twice as much as the S&P, and the NASDAQ was down. But in terms of this whole stay-at-home, I think one thing that Jeff said was Jeff Zenneri said is it's not all or nothing. And what I am seeing is I'm seeing the market broaden, the S&P broaden a lot. If you looked at it 6 months ago, it was very concentrated in specific stocks. Now it has a very wide exposure, which is very, very good for the overall market. I am still very skeptical on the cruise ships, the airlines, and all of those stocks. I don't believe we are ripe for them quite yet. I still believe people are only now are going to be beginning to ask the right questions. And usually when people start asking the right questions, that's when you see shifts and trends. And I think just now, over the next 3 months, people are going to get I think what a lot of the traders were seeing 4 or 5 months ago, the world is going to be up against. In other words, how long is it going to take for the average person to get the vaccine? How much is it going to cost? How many people are not going to take it? How many people are really, really sick? I think all of these questions that we've had are going to reflect themselves, or the answers there of which are going to reflect themselves in the market. And I think that's the next stage. But for right now, I'm trading exactly the same thing that I was speculating on 2 months ago. Small cap stocks moving higher, industrial and basic materials. I think those stocks are leading, and I'm not going to second guess what will happen next. I'm focused on that right now.
Sure. Okay. Do you think that there is a high level of confidence that beginning in January, we are going to have a clear direction in the U.S. government that is going to result in some repositioning vis-a-vis China stocks, basic materials, et cetera? And I'm going to start with you on that, Jeff Yasteen.
Yeah, I think we will. Although I think you could almost argue that a lot of that repositioning is already happening. Like, a fair number of the alternative energy stocks, like Plug Power's done great. Other ones like First Solar have been continuing to sell off in bits and pieces. So I would expect that sometime in January, as you were describing, would be where some of those ones that have been lagging until now in those areas have will start to get more traction, move higher again. For the rest, I think a lot of it, this move is so broad, and I feel like it's really moving beyond the the macro aspect of the inauguration or what have you. And I think the market's just looking beyond all of this till 6 months from now. So, I guess I disagree to a point regarding like airlines and cruise ships, only because I think the market's just looking beyond that. They're looking 6 months down the road, where it's not just how many people are flying, but how many seats and passenger berths are available. And for both sets of industries, cruise ships, they've sent dozens of cruise ships to the scrap yards. So, that capacity that was in the industry is no longer there. And the same thing for the airlines. I don't know what percentage of their fleet is sitting out there in the boneyards in the Mojave Desert, but there's a lot of planes sitting out there. And granted, they can bring those online, but they're not going to bring them online super quickly. They're going to want to milk these, the yields that they get per seat or per passenger berth. They're going to want to milk those for as long as they can until the volume of traffic is such that they're just forced to do that, or their competitors, grab market share. So I think this is what we're seeing now is beyond just the macro aspect of the inauguration.
Mm-hmm. Jeff Z, what sort of moves are you making to position for a new administration in 2021?
Well, I think the biggest surprise has been this split Congress executive branch, and it's been a positive surprise. And I think broadly speaking, I think Adam's been speaking about this. I think we all have, is that the trend is bullish. We're in a bull market. So like step one is what kind of a market are we in? We're in a bull market. So has anything really like jeopardized this from being a bull market? The answer is no. I think the big question marks and the big fear that people had from a political standpoint was that there'd be this huge blue wave, and it would be really burdensome tax structure that would come into place, and those things have kind of dissipated. I think the Georgia runoff election is pretty much priced in that one of those seats will be a Republican, and I think there's not too much surprise. I'm hearing more and more chorus from people I know in politics that Trump's going to just walk out. He's going to exit stage left. He's positioning for his next life. And that's just reality. So people want to hype it up like there's going to be this big, civil war, et cetera, et cetera. That's not reality. It's not.
Mm-hmm.
Not in my opinion.
Yeah, that makes sense to me. Adam, what have you got on the outlook for 2021 at this point?
Sure. So I agree with Jeff Z, where he just said that it's going to be a nice, simple exit. There's a possibility Trump sets up his own news network and he does what he wants to do. But I was on a call this morning with somebody who played golf with a major GOP senator this weekend, and he said the exact opposite. Trump has no intentions of leaving, and this is firsthand. This is from the person that was saying it this morning, so I didn't directly hear it, but it was told directly to him over the weekend. They were playing golf together, and that said that there's no intention to leave whatsoever. It's a rigged election, and he's going to put his heels down and hunker in and fight it legally as long as he can. Now, if he wins the legal battle, so be it. If he doesn't win it, so be it. But my view, as far as to answer your question, how to position ourselves, I'm positioning the portfolio with two things. Number one, with the whole idea that eventually this news of the vaccine and the COVID world that we're living in now will be behind us. And then secondly, I want to see where the most explosive growth opportunities are in that new world coming out of the COVID world. Because it's not going to be like Roger and Jeff Z said, snap your finger, we're back to normal. I'm jumping on a cruise, I'm jumping on a plane, so on and so forth. It's going to be a slow, gradual return to normal, in my humble opinion. Of course, I'm open to any possible scenario, but that's kind of what I'm thinking. So if we do get a situation where the COVID news is behind us, Jeff Y's point about, hey, these undervalued areas are going to come racing back. I do want to participate. Financials are very attractive. The travel stocks are very attractive from a valuation standpoint. And what I want to do is I want to find the strongest stocks in those groups that are able to perform and grow in any environment. And then the other side of it, everyone's leaving these stay-at-home stocks left for dead. I'm very bullish on them because in bull markets, surprises happen to the upside, not the downside. And right now we are in a bull market, and to echo, Jeff's comments, and these stay-at-home stocks are still going to do well. So you're telling me that after COVID passes, people aren't going to shop at Amazon, or they're not going to use Zoom to have these calls, or whatever the case may, Peloton, they're going to get off their bike and return it and cancel the subscription. So as those stocks fall out of favor, that great mini rotation, that really helps me whet my appetite, because the valuations of those, they were really, they become a lot more attractively valued as most of Wall Street forgets about them, because to my opinion, they're not going away. They're going to survive and still thrive in the post-COVID world. So I hope that answers the question.
Yeah, sure it does. Okay, Roger, and how do you wrap all that up from what your perspective is?
I believe that the market started pricing in the new wave, or the new type of the new government, or the new leader of the free world, if you will, as early as the first debate. That's when I really saw the Russell started leading. The Chinese stocks becoming very, very strong. And the way it's positioned right now, I believe the best way to deal with this is not to project too far into the future. But with that said, if I was going to position myself, I think we're going to see a very strong uptick in government aid for evergreen projects and alternate energy projects. I think we're going to see tremendous amount of Fed and government aid going into healthcare stocks, and not necessarily the hot COVID stocks right now, but other type of stocks. And I think we're going to see a fairly friendly climate towards marijuana, but it may be a little too friendly, and that may oversaturate the business model that they're seeing right now. So I would be very cautious on that specifically. But overall, I would go with smaller stocks, because whenever statistically the Russell underperforms the S&P for a certain period of time by a certain percentage point, which it did, it tends to outperform for 3 years. And the typical gain on a Russell stock is about 6.5 times the gain on an S&P stock, for obvious reasons. So smaller stock, not tiny stocks, but smaller stocks with a market cap of 2 billion, 5 billion, not 50 billion. And evergreen stocks and stocks focused on China. Now, if I was an investor, I would also focus on the 2 biggest chip industries or subsectors, which is cloud computing and REITs that house the clouds. I think those are supposed to grow for the next 3 or 4 years at a cumulative rate of about 40 to 50% per year. Oh yeah, it's like that, James.
Wow.
Yeah.
Wow.
Yeah. That's not according to me. That's according to Bank of America. So over the and the state and this thing we're and let me to add to what Adam just said. I don't think I wouldn't throw the baby out with the bathwater with the stay-at-home stocks. I wouldn't do that. I think that's foolish. I think what's happened is I think people are looking at it the wrong way. I think instead of saying things went this way, now they're going to go back, I think what really happened is technology went fast forward, but technology doesn't go backwards. It continues moving forwards. You know, you never see. It's not like we discover a TV that's 3 inches wide or narrow, deep, and then we go back to the 80s TVs. It just doesn't work that way. We go forward. So once the genie's out of the bag, once that Peloton, once people start using something and like it, like Zoom or Peloton, and that's their thing, it doesn't stop becoming their thing because because you can go back to doing it the old-fashioned way. It doesn't work that way. So a lot of what Adam says has there's a lot of wisdom there. So again, I wouldn't throw out the stay-at-home stocks. I'm seeing, and again, as I said a few minutes ago, I'm seeing the S&P broaden, but I'm not seeing really a big decline in those stay-at-home stocks. I'm seeing a decline in the FANG stocks, in the NASDAQ 100 FANG stocks. But that could be for many, many reasons. So again, smaller stocks, industrial, basic material, and don't throw out those stay-at-home stocks. There's a lot more upside potential in them because they're not stay-at-home stocks anymore. They are disruptive trend stocks now.
Mm-hmm. Okay. With the announcement of now the second promising vaccine, does that diminish the argument or the expectation for a massive stimulus package at some point in the near future? And are you making any sort of adjustments with that in mind? Jeff, Yasteen, let's start with you on that one again.
Yeah. I was pondering that this morning after seeing the Moderna news. It's a good question. My guess is that it will not interrupt a package of some kind emerging from Congress. It probably does make it a little harder to sell politically, but I think a lot of that's just seeing enough weight moving towards going into January before we see sort of the political alignments sort of all come together. But with government, typically they will eventually just throw lots of money at this stuff, and I think they probably figure, let's do it now because we still got 3 months, 6 months, presuming the vaccine timetables go according to what we've been told. that still means, 6 months or so of problems and disruptions within the economy. So why not kick in another, $1 trillion here, $1 trillion there, and after a while it adds up to real money.
Sure, you bet. Jeff, what do you think? Jeff Z.
Listen, they're gonna because it's not gonna be consensus one way. There's gonna be a stalemate. There's not gonna be the large, huge, like $5 trillion stimulus thing, right? So then it's gonna be, it's gonna be, as Roger said, technology that has sustained us, driving things forward. So if you're investing hoping on some sort of government intervention, I think that's the wrong way to go about it. I think there's plenty of places you can make a lot of money that don't need to get bailed out, is what, is the bottom line. And, for me, hope is not really a strategy. So I don't like to pin my hopes specifically on politicians or elected officials or bureaucrats, especially, to make things right. There's lots of things that are working. There's huge amounts of money that's going to continue to happen. There's going to continue to be a huge amount of monetary stimulus that you can price in. You can hang your hat on that. We're going to be at 0 rates for 5 years. Fed's going to be manipulating the commercial paper market as well as the treasury market. And that's why I think you have a lid on rates. You can hang your hat on that. So I'm just looking at things you can hang your hat on rather than, guessing which the 5th best cruise company in the world is going to be in 2022 and if they should or shouldn't be in business. There's a lower hanging fruit, in my opinion.
Sure, you bet. Okay, Adam, and so what's your expectation?
To agree with everybody, if the government has a chance to spend money, it doesn't matter what side of the aisle, most of the time they spend the money. So if I had to bet, I'd bet they're going to spend the money. So that's not only a bullish call on the market, because the catalyst for me on a serious side here would be if the market gets in trouble and enter any reason you possibly can think of, that stimulus package is going through, and it's going to go through like a hot knife through butter. So it's all about probabilities. If you in finance, when you manage money, people, there's something called the KYC rule, right? You have to know your customer, make suitable investments, so on and so forth. So in this business too, it's the same thing. You have to know your customer when dealing with governments and bureaucrats, and just the way the system is structured. Odds favor they're going to spend the money. So I don't put anything past anybody in all due respect to everybody in politics. This is not a negative comment towards them. It's just, if you go back and study any political system in history, they have a chance to spend, they spend. So if the market goes down for any reason, I expect not only like Jeff said, with the Fed keeping rates at 0, maybe they'll do even more QE. I don't know how you can do more than QE infinity, but hey, anything's possible. I didn't even think you could do QE infinity, and here we are. So will we get another round of fiscal spending or fiscal stimulus? I think so. Maybe not as big, doesn't really matter. So that's just another bullish, feather in the market's cap, from my humble opinion.
Right. Okay. And Roger?
Well, as everybody was talking, I just couldn't help but think about the dynamics between Biden and the Fed versus Trump and the Fed, because I think Trump did an amazing job of getting what he wanted out of the Fed. I'll say that delicately. I don't know if Biden will, but here's the thing. I think 80% of the political agenda that's going to play out that will impact the economy, and I've said this many times before, has been set, or the stage for it has been set February, March, and April of this year. I think the events that unfolded, this whole COVID explosion, and how the government reacted and what the Fed did, and all of these things that already happened that Adam and Jeff both talked about right now, and Jeff Yestein as well. I believe that those things are the overriding factors that are going to be moving the economy. I think everything now at this point, at least for the next 2 years, is just a reflection or kind of like decisions that are made based on that. So yes, I think we're going to get a package. I think we're going to get plenty of cash. I don't think it's going to be as big as the first one, but I don't know it. A lot of it depends on who's going to be running the Senate, and we won't find that out for some time. So yes, I think we're going to get plenty of money from the government, and I think that's going to be another prop to keep the market higher. But again, I believe most of what is going to happen over the next 18 months to 24 months was triggered. The catalyst for it is not the political agenda or who's even the president, but what happened beginning of this year.
Sure, you bet. All right, gentlemen, that's a great roundtable again. Let's leave it there for now. I look forward to seeing you all during the week. Have a great trading week.